Hello and welcome to our special segment where we talk all things crypto, the news, views, analysis, and the latest developments as well. Joining us today on the show is Punit Agarwal from KoinX, and we will talk about India and its tax filings, and of course, India's opportunity to lead in sense of tax regulations and crypto regulations as well. Punit, hi, what a pleasure to have you on the show today. I want to begin by asking on how 2022 as a company has been for you to begin with.
Sure. Thanks. First of all, thanks Manisha for hosting Kim. So 2022 have been very interesting for us because that was our inception year. We started our journey in 2022 and laid the foundation stone of the company, and we launched our products, scaled the company, and also completed our fundraising. So now we are at the words where the product is live and we are set to serve more set of users for their crypto taxations and for their crypto regulations.
Puneet, automated crypto taxation as a platform, what led you to it? What kind of a feedback have you seen? How many people have you been able to onboard onto this?
Sure. So what led me into this, Manisha, is previous to this, I was heading a fund where I was managing a crypto relief fund and was working closely with regulators. So when I was working in there and deploying, and so we deployed about $170 million in the last year. That's where I got exposed to regulators and regulators from the Indian government space, from the crypto space, and from the overall ecosystem. And it hit me hard that now we have 1 or 2% of the population who is exposed into cryptos who are early adopters, but for this adoption curve to increase, and regulation is the only way forward. People are waiting for clear regulations on how to go about it. That With that, we'll see the larger volumes, the larger audiences, and the larger enterprises entering into this ecosystem as a whole. So that's how I was intrigued about regulation as per se. And parallelly, Indian government announced taxation frameworks for cryptocurrencies or for virtual digital assets in the country. And I started looking at my personal portfolio and seeing how will I calculate taxes on my portfolio, and found the entire space to be like complete white space. There was no clarity around it. Even when I am in this industry for about 5 6 years, it was a complete nightmare for me to calculate my taxes. And that's when it hit me hard that day, taxes cannot be on an assumption. Taxes cannot be as per assuming certain things and putting it kind of in a Hindi word called andaz mein. So it should be something which is accurate, something which is crisp, something which is clear. So that's something that I wanted to work on to help all the crypto investors file their crypto taxes, diligently, accurately, and rightly. So that's how
Well,
the
yes.
journey started. Right? Sorry.
Yeah. So no, Puneet, I was just getting in and saying that even as we've been filing our normal income taxes all our lives, and this is something entirely different because this is not currency. This is about cryptocurrencies, and there's a blockchain involved, etc. So, what is it that you offer to clients?
Right. So what we allow, so as very rightly said, Manisha, the other income taxes is totally different than crypto because this is a new segment altogether. Here we have, people who are trading into cryptocurrencies, people who are receiving their salaries from cryptocurrencies, people who have, like how we have fixed deposits in the financial ecosystem, crypto has something called as staking. So there are all of these different kind of, parallel instruments that run in the crypto space. And now how would you calculate taxes on it? And like stock market, where there are only two exchanges in the Indian ecosystem. In cryptocurrency, people are exposed to 500 plus platforms. There are 25,000 plus cryptocurrencies which are already listed on CoinMarketCap and CoinGecko combined. And then unlike one of the major differences, unlike stock market, where the base price is INR, if you let's say you want to buy a Tata Motors share, a Reliance share, any of these, you can only buy through INR. In crypto to crypto trading is also allowed. So I can literally give you a Bitcoin and take ethers, and that's the entire transaction. So when all of these complexities add on, that's where it becomes very difficult for a retail investor in the crypto space to calculate like what is my cost, in terms of the INR. How much did I actually pay for this asset? And when I'm selling it, what is the final conversion of it? Most of the exchanges are considering their jurisdiction or national jurisdiction or NSE or BSE are just for Indian jurisdiction, or NASDAQ is for jurisdiction, US jurisdiction. So in cryptocurrencies, exchanges are global. There are no geographies, there are no boundaries. So how do we bring in all these ecosystem and how the tax calculation mechanisms, the profit and loss statements, the INR or the equivalent local fiat value to it, and this adds into the complete complexity. Now, where we come in is immaterial of which platform you're trading on, whether it is an exchange, whether it is a decentralized platform, whether it is a MetaMask wallet or any blockchain wallet that you have created, immaterial of those, we
Okay.
as a platform become kind of an aggregator where you're investing on certain platform, you just link the trades to our platform. So
Okay.
wherein as a platform we understand what you're trading, what you bought, what you sold at what time, what quantities. We look at your trades and analyze those trades and give you your tax reports and your profit and loss statements. So you're making those transactions on those respective platforms, but as KoinX, like we help you bring all your investments on one single dashboard and
Okay.
look at your entire capital gains and your respective taxes for it for different
Puneet, how many
jurisdictions.
people are really comfortable sharing real time the kind of investments that they are making with their tax person?
So like there are like compare it. So we are starting soon. But we are starting like we have just started recently. But if I give you some of the global numbers, there are already counterparts of us who are active in this space. In other jurisdictions, let's say United States, Canada,
Puneet, not
Europe,
exactly the
Australia.
number as well, but do you think people would be comfortable sharing online? I mean, integrating their wallet or their trades with you. I mean, do you think that that's how it would work from here?
Absolutely, because in blockchain, anything and everything is again, like
Right.
public in nature. So anything that you trade is in public. Secondly, we as a platform do not ask for any KYC. So you do not require to put in your identifiable information in terms of your Aadhaar, your PAN number, or any of these to the platform because we help you calculate your taxes. So for us, you are again an anonymous user. We do not know who does this wallet belongs to, but you have now a tool through which you can come and calculate in your taxes and bring in all of your investments into one single dashboard. So imagine like platforms like Cred or and the money or like all of these bank aggregators now which are present in where they can literally help you analyze your credit card statement payments and help you pay accordingly to that. So people have been doing that in the past, and this is not something as a new. And also, if you look at the AIS, the AIS system that came in on the income tax portal, it literally tracks each and every investment of yours in terms of what you've invested into mutual funds, stock markets, into your bank account, income rates, or the savings interest that has been generating into your bank account. So, like this is not a new concept which has been introduced.
All right. Puneet, also, when you're giving a specialized service, is the cost higher than for these types of tax filings or the special services that are being attached to it?
Right. So we specialize on the crypto taxations. So for a person who is looking to come in to calculate their crypto taxations, like we again, so since the audience is Indian ecosystem, the prices are also considering the purchasing power and the paying value of this jurisdiction. So our plan starts right from zero. So like if someone is just holding into cryptocurrencies or have made only a few transactions, when I say few, so if they have less than 100 transactions in a financial year, they do not pay anything to the platform. If they have 101 transactions to 500 transactions, that's where they pay less than $10 a year, which is 750 rupees a year. So like the pricing plans and all is also very economical for users to come in and calculate their taxes because the tax slabs itself is in the higher slabs. So we do not want to overburden with calculation of the taxes as well. So calculations part is economical there.
All right. Puneet, also because this is a global market, and while of course the taxes are quite Indian here, how what is the global learning here? How are the taxes being done in the other important, more prevalent markets? And is the transition easy for you? Because clearly people have accounts in various exchanges. How are you dealing with all of that?
No, it's definitely not easy. It's a very complex ecosystem, Manisha. So, like people have futures, people are trading in derivatives, options, margins, lending, borrowing, staking, and the list is long. So there are a lot of different types of transactions, and each of this has to be treated differently when it comes into taxation. And that's exactly like what of our day-to-day operations are in order to understand these type of transactions, understand what platform it is happening on, how to deal with it, and then calculate the taxes. So one, it is definitely not easy, but in terms of global how the ecosystem is in terms of the global scenario. So in India, the taxation methodology for cryptocurrencies is very simple, to be honest, because it's flat 30% on your profits. And there are only three heads under which it can fall into: either a capital gain or an income from business, or income from other sources. But there is no such differentiation in terms of short term, long term. There is no differentiation in terms of how the staking, would it be treated differently? Would mining income be treated differently? Would salaries be treated differently? But in other geographies, there is also, like in-depth analysis on how the entire, how your income from cryptocurrencies are treated. Would salaries be treated differently? Would staking be treated differently? So there are a lot of analysis that can be done because cryptocurrencies, like, there are multiple types of transactions that can happen in the crypto space, and how we have different taxation scenario in the traditional financial world, where my savings account interest are taxed differently, my mutual fund long-term short-term gains are taxed differently. The similar sort of mechanisms is expected in the crypto space as well.
All right. Punit, I'll wind down this conversation with one final question. And 2022, in sense of participation, volume growth clearly has been a bit of a disappointment. But as we get into the new year and with so much expectations, whether it has been about regulations, we are hosting G20, so the markets really are ripe for a lot of incomings in this sector. How is the year looking to you?
Sure. So one of the very, like, biggest opportunity that India carries on now with respect to G20 is, like, bringing in global crypto regulations, because crypto regulations cannot be formed locally at one country. It needs to bring in a consortium together and build out a global regulation. And that's where India has a very good opportunity now. And like, to form a regulatory framework that can be combined with multiple other countries and come out together with a crypto regulation framework. So I think that is one of the very important stages. Second, recently we have seen, like, a lot of turmoil in the industry in terms of the FTX, shutting down or similar kind of situations. That's where it is very important to also bring out regulatory statements to protect the end retail investors on, like, for exchanges, maybe, like, what are the different regulations for exchanges, what are the security practices, how much of their funds could be in hot wallets, could be in cold wallets, should the user's fund be kept in a separate bank account than the exchange's own funds or the company's own funds. So a lot of these basic to advanced, regulatory aspects could be brought in to overall protect the end retail investors and ensure that their hard-earned money is not being hacked away or is not being misused by some platforms. Overall, giving the entire crypto industry a negative image. So there are a lot of positive things that can come out from this. So I think there is a lot of room for regulation now, and with time, and it's not that like, government is not working on this. There are already a lot of discussions happening with various industry associations, that is happening in regularly with the government authorities. But the core idea being, now we should start acting on those and start bringing out these regulations, so that overall the country and the crypto investors are protected heavily.
All right, a lot of details expected, of course, from the budget and the year as well. There's a lot of clarity that the industry is seeking from the new year here. Puri, thank you so much for joining us, and thank you for that deep dive into tax calculations in the Indian markets for crypto. Clearly a specialized field, and there is so much being done onto that front as well. Thank you so much for joining us for this segment.
Thanks a lot, Manisha. Thanks for hosting. Thank you. Bye.